Welcome. Today we're going to explore a powerful historical parallel, how the artificial intelligence boom of today mirrors the internet rollout of the 1990s. It's not just about looking at similarities, it's about understanding the path a technological revolution takes to better understand where and when to pivot and what to expect even from individual stocks. If you lived through the old .com era, you remember the pretty slow moving web pages, but you also remember the monster stock moves. There was optimism, speculation, booms, and ultimately busts. But it changed how the world communicates, learns, shops, invests, and ultimately functions. It changed the way we live, work, and play. For those of you who have studied legendary investor William O'Neill and his CAN-SLIM system, you know that finding stocks that can change the way we live, work, or play is the secret to big stock returns. Now it's happening again, not with modems, but with artificial intelligence. And like before, it's unfolding in waves that are fairly predictable. First is the infrastructure wave, followed by use cases, and then finally, broader transformation. The internet rollout is the best playbook we have, so we need to study it very closely. Several years ago, Bill O'Neill gave us one of his last gifts of education with a series of articles on some of the greatest stock runs in history. We'll be using these articles to visualize how the tech revolution had tremendous implications for the stocks which led that revolution. We'll trace these three phases we're talking about through real companies, real numbers, and real patterns that have played out before and are likely to play out again with the AI revolution. So let's go back to the early 1990s. The internet at this point was more rumor than revolution. It was used by academics, government researchers, but the average person had never touched it. It was clunky, confusing, and slow. Actually, it's pretty close to what AI was just a few years ago. But beneath the surface, the groundwork for a revolution was forming. The commercial internet was about to emerge, and with it, a chain reaction of innovation, speculation, and wealth creation. This first wave of any major tech revolution is infrastructure. It's the part nobody sees, but eventually everyone depends on. In the internet era, that meant routers, switches, servers, fiber optics, and storage systems. This is where companies like Cisco Systems, Newbridge Networks, and eventually Nortel Networks and JDS Uniphase came to fame. Cisco built the routers, switches that would direct traffic across this emerging web. They were the gatekeepers of connectivity and benefited tremendously. Cisco's a great case study of what's possible. It had one of the greatest stock runs of all time, advancing 2,300% on its first leg up to 1993, but ultimately advancing as much as 87,000% by its peak in early 2000. It's enough to turn $10,000 into $8.7 million. It's a good thing we have stock charts, because even just saying that sounds pretty hard to believe. But there's a great example of a company few knew about, but had booming earnings per share growth that supported a relentless stock rise. However, most advances tend to be shorter in nature, such as Newbridge Networks, which, as seen in this marked up chart by William O'Neill, advanced about 800% in 1 year, never closing below that red line, which is its 10-week moving average. Really a dream stock to hold. That 10-week moving average is essentially the 50-day moving average on your daily charts. And it's really best at capturing the most powerful upswings of these leading growth stocks. Definitely something worth having on your charts and following closely. But now, in the first example of technology building on itself and creating new opportunities, EMC Corp took the lead in 1993 and became the backbone of enterprise storage, holding the exploding volumes of data that digital businesses started to produce, resulting in a 1-year move from $6 to $40 a share. A year later, in 1994, Ascend Communications, which helped broaden access to the internet by providing dial-up internet providers with gear needed to onboard millions of new users, this young company and new IPO rocketed from a split-adjusted $1.80 to $70 in under 2 years. Incredible. Interest in the internet led to a need to speeding up browsing speeds and capacity. Just like with AI today, people want more and more speed and more capability. And Nortel Networks laid fiber optic cables across cities, countries, and continents, laying the foundation for fast, reliable data transmission. JDS Uniphase produced the optical components needed to make those cables actually work, and the stock benefited tremendously. But the mention of Nortel is one of the first examples of what can also go wrong in a tech revolution. Having had an incredible advance over the past decade and crowned Canada's largest company, it ultimately declared bankruptcy a few years after its dot-com peak. We'll get into that later, but for now, let's get back to the growth stage. This infrastructure that we're talking about was all critical. It wasn't glamorous, but the stock returns were. You could draw a straight line from every future tech giant to these companies that made digital life possible. Forward-looking investors made phenomenal returns, and importantly, the groundwork was laid for the next phase of technological revolution. But this was the foundational phase, similar to laying down railroads before trains or running copper wires before telephones. You couldn't predict the future precisely, but you could see who was supplying the picks and shovels. From an investor's perspective, stocks advanced hundreds or even thousands of %, with the steepest of gains usually occurring in winning stocks over 1 or 2 years. So this gives us a clear benchmark for the potential returns of the best stocks, as well as the typical holding periods if you plan to actually capture returns of that size. But now, let's move on to the next phase, use cases. Once the infrastructure was in place, entrepreneurs and engineers asked the next question: what can we build on top of this? This was the browser moment, when the internet stopped being invisible and started becoming tangible. Netscape Navigator gave users a visual way to explore the web. It was clean, clickable, and pretty fast for its time. Suddenly, the abstract idea of a World Wide Web had a user interface. Then came Yahoo, organizing the internet's chaos into categories and search results. AOL then launched its iconic You've Got Mail service, offering a bundle of email, chat, news, and games that brought tens of millions online. They would mail millions of CDs by mail, offering people the opportunity to access the internet for a few hours free of charge. As a kid, I still remember trying out that 4 or 5 hour free offering from AOL. Yahoo and AOL became the on-ramps of the internet and monetized everyone seeking organization and a homepage. It's no surprise that Yahoo came to market in 1996 as they took the internet past the infrastructure stage into the new use cases stage. It was a new year, but returns were equally spectacular. It gained from its roughly $5 IPO, split adjusted, to almost $220 in late 1998, early 1999, a 44-fold move. AOL's advance also took shape just around that same time, and it leapt from $10 to about $170, a 17-fold move in a little more than a year. But beyond internet portals, companies like E-Trade, Charles Schwab, they were revolutionizing investing by giving the average person access to real-time stock quotes and online trading. They leveraged the internet to offer a new version of a mature business. They rapidly took market share as sending in a stock order online was quicker and cheaper than calling up your broker, who may be on a coffee break when you need to get him and submit your order. The result, as the 1998 market correction ran its course, Charles Schwab advanced from $30 a share to $150 a share in just a few months' time. Similar to all the other stocks mentioned, Schwab was changing how we live, work, and play. It wasn't just hype. They had real revenue, real earnings. The second wave of growth wasn't about infrastructure anymore. It was about utility. The internet became useful, even addictive, and it started solving real problems. The internet wasn't just a technology anymore. It was entering homes, offices, and schools. It was creating new habits, new dependencies, and new demand for the infrastructure that supported it. But next came the third wave, transformation, the point at which the internet stopped being a product and became a platform for reinvention. A good example is Amazon, which started by selling books online, but behind that modest storefront was a new vision for retail logistics. The company's real asset wasn't books, it was distribution, warehousing, and eventually cloud infrastructure. eBay let people auction off goods from their garage to buyers around the world, and then PayPal emerged to solve the problem of payments and handled all the payments for eBay and eventually for a large part of online purchases and sales. These weren't websites, they were marketplaces. Ultimately, Google saw a better way to drive search and emerged in the late 90s, but quickly became the backbone of internet navigation. Its search algorithms gave order to chaos, and its ad business, built in the early 2000s, would become the most powerful monetization engine in internet history. Meanwhile, Qualcomm, with its 2,300% return in 1999, enabled mobile connectivity, paving the way for a world when the majority of people access internet on their phones rather than their desktops, something that was inconceivable back in the early 90s, and also paving the way for Apple and the iPhone moment in the next decade. Enterprise software companies like Oracle helped businesses scale and automate in ways never seen before. Their databases powered everything from e-commerce to finance. Oracle's still making new all-time highs decades later, making its founder one of the richest men on the planet. Importantly, these companies were the next logical step after millions of people finally gained simple and affordable access to the internet. And these are only some of the opportunities. We didn't mention Dell, Microsoft, and just so many others. Each stock presented investors with a chance to drastically improve their lives financially. But investors had to understand which stocks to focus on, understand when it was time to buy, and ultimately when to sell. The market has great opportunities, but it isn't easy. By the end of the 90s, every industry had to reckon with the internet, what the internet meant for its future. Media, advertising, retail, travel, logistics all began shifting online. The internet pressured established businesses, but also not every tech startup made it. There was excess, there was speculation. Pets.com became a classic example of excess, raising nearly $100 million in its 2000 IPO, which at that time was a tremendous amount of money. It closed its doors only 9 months later as it burned through all of its capital. Another example is Webvan, which spent hundreds of millions of dollars building infrastructure for an online grocery delivery service, a concept that would only become viable decades later. Though they had a great idea, couldn't be monetized yet. So you have to go beyond the idea to something that can actually be monetized. The dot-com crash wiped out trillions in market value, but also cleared the stage. The companies that survived, Amazon, Google, Apple, went on to become dominant institutions and pillars of modern American capitalism. And the companies that built the infrastructure, many stayed relevant for many years. Some like Cisco and Oracle are still here. Others like Nortel and JDS Uniphase were eventually displaced. The key was understanding the sequence. Infrastructure comes first, then comes use cases that bring utility, and lastly, broader transformation. And this is exactly what we're seeing today with AI. Once you can start to look at it from this lens, you'll see how that parallel really becomes clear. So let's shift to the present, because what's happening in AI right now doesn't just resemble, it's really echoing it. If you understand how the internet rolled out, you have a massive advantage in understanding where AI is going. Today, in the world of AI, the technological foundations are being built again, but this time it's digital horsepower. It's chips, clouds, and compute. This is again wave one infrastructure. And while this phase has already been unfolding for several years now, the key insight is we're still in it. We may be starting to step into wave two or start to glimpse it, but the foundation phase is not finished. Most of the world hasn't yet fully upgraded to this new AI-ready infrastructure. Data centers are still being built, power grids are still catching up, even the hardware supply chain is racing to meet demand. That puts us, historically speaking, probably around 1994 or maybe 1995 in internet terms, right before stocks and innovation went wild. It's the moment just before the world catches fire with possibility. The infrastructure is maturing, but the mainstream hasn't quite tuned in yet. Investors still have time to position ahead of what's coming. Let's take a look at some of the current stocks leading the infrastructure wave. Of course, at the center of this AI infrastructure story is NVIDIA, whose chips are now essential to machine learning, just as Cisco's routers were to the internet. NVIDIA's rise from $15 in 2023 to over $150 by 2024 reflects just how central this company has become and is really the first massive AI winner. Though NVIDIA has had an epic rise, most have really become fixated on NVIDIA alone, while many new companies begin to carve out their own niches. Supporting the immense energy demand of NVIDIA's chips training all of these new AI models is GE Vernova, which is providing the electrical infrastructure needed to really run AI's massive compute needs. Just like Nortel and JDS Uniphase enabled faster internet speeds with fiber optics, GE Vernova is modernizing power systems so that AI doesn't run into that energy bottleneck. On the compute side, there's CoreWeave, which has exploded onto the scene by building AI-optimized cloud infrastructure, lean, efficient, purpose-built. Having IPO'd at just $40 a share very recently, CoreWeave has reached $175 in less than 3 months. Whereas Amazon Web Services and Azure were built for general workloads in the cloud, CoreWeave is building for the AI from the ground up. This is a great example of how innovation will disrupt mature businesses and lead to new avenues of growth previously not thought possible. It also demonstrates how new AI-focused, purpose-built companies will have tremendous advantage against established companies. And what about data? We spoke about data in the 90s. Well, enter Rubrik. With AI generating and relying on so many petabytes of data, Rubrik is essential in securing, backing up, and protecting those assets. Think of them kind of as today's EMC, a behind-the-scenes giant making sure the backbone doesn't break. Finally, Palantir sits at the software orchestration layer. Just like Microsoft brought software to the enterprise in the PC era, Palantir is integrating AI into business operations, turning messy data into clean decision-making. And like Microsoft in the 90s, Palantir is slowly becoming indispensable to how companies actually deploy this technology. These companies, NVIDIA, CoreWeave, GE Vernova, Rubrik, Palantir, are still building. And investors are only beginning to grasp how critical they're becoming to all of this. This infrastructure wave hasn't ended. If anything, it's accelerating, and the new names keep emerging, such as Nebius, which is competing with CoreWeave, but from a different go-to-market angle. So this is the infrastructure stage. Let's begin moving on to use cases. If infrastructure builds the rails, then use cases run the train. This is where AI stops being an abstract idea we're preparing for and starts impacting people's lives directly. The transition began with OpenAI's ChatGPT, which launched in late 2022, kind of like when Netscape before it. ChatGPT turned a powerful backend technology to something any person can use. Suddenly, AI wasn't just a story in the news. It was writing emails, answering questions, and drafting code. It was useful. But from there, we set off an explosion of innovation, with companies racing to stake their claim in what is now possible. For example, Tempus AI is transforming healthcare by enabling real-time, AI-powered cancer diagnostics, comparable kind of to what WebMD and digitized health records did in the 1990s, but now deeply personalized and potentially life-saving. In transportation, Tesla, Waymo are pushing toward full autonomy. The use of real-time learning models echoes kind of how brokers like Charles Schwab democratized finance. These are not small shifts. They're paradigm shifts. If we can get to autonomous vehicles, think of how many facets of life this would change. It's really, really tremendous. Figure AI is bringing robotics into warehouses and factories, automating tasks previously dependent on manual labor. If NetSuite and SAP revolutionized supply chains in the 2000s, Figure is bringing that revolution to the physical world. And AI is really touching every industry. In law, AI is reviewing contracts and predicting case outcomes. In education, it's tailoring lesson plans to individual learners. In marketing, it's generating personalized content at scale. These aren't pilot projects anymore. These are massive scale, and the market's noticing. So let's talk numbers. OpenAI is now valued at over $150 billion. As I mentioned, CoreWeave went from an IPO at 40 to 175. GE Vernova doubled since its 2022 spinout. Rubrik IPO'd at $20 in 2024, now trading around 90. And Palantir is up from $20 a share to $140 a share from the end of 2024 to mid-2025 as commercial adoption expands. Tempus AI has a $10 billion valuation, and Tesla has moved up more than 50% from its 2023 lows. If that feels like a lot, remember, this is just the beginning. We're only now starting to see use cases get traction. Just like in 1995 when AOL introduced to the masses to the internet and Yahoo began organizing it, we're seeing AI make its case to the public. This is the moment when technology goes from niche to necessary. It's when the market stops asking, is this real, and starts saying, how do I use it? And that's when things move fast. The late 90s saw Yahoo rocket from $13 to $475. AOL climbed from $11 to $94, Qualcomm from $5 to $180, and Amazon IPO'd at $18 and went up to over $100 by 1999. Those moves didn't happen during the infrastructure phase. They all happened when products and services captured the imagination of the majority. And now we're just starting to enter that exact same phase again. So AI isn't new, but the adoption curve is just starting to steepen, and that means opportunity. Tremendous historic opportunity for those who are paying attention. Now, let's take a look at the final and most transformative part of a tech revolution, which is that last third phase of transformation. This is when AI doesn't just enhance industries, it rewrites them. Very difficult to see so far into the future, but we can start to get a glimpse from what people are talking about that we can get a sense of what's possible. So again, in the 1990s, this was the moment when companies like Amazon stopped being just booksellers and became platforms, when Google stopped being a search engine, became the infrastructure for modern advertising. When enterprise software went from spreadsheets to cloud-based, always-on platforms, AI is on the cusp of this transformational phase as well. The ingredients are coming together: compute, data, models, and most importantly, adoption. But one transformational opportunity for AI that would probably be that third phase is to leave the digital world and enter the physical. AI is finally allowing robotics to move beyond specialized tasks and we can consider tackling everyday uses. Tesla is leading the charge as Elon Musk looks to mass produce his Optimus robot, which he believes may be the biggest product in history. Autonomous, responsive, and affordable robots really have the potential to transform every facet of society. It may seem wildly far-fetched, but think of how much we do today that seemed impossible just a couple of decades ago. Actually, ChatGPT would have seemed pretty unimaginable just 5 years ago. Elon Musk is also squarely focused on autonomous vehicles. And so keep in mind William O'Neill's sage advice that incredible stock moves come from companies that can change how we live, work, and play, which is exactly what phase 3 of a tech revolution accomplishes. The only issue is much of what to come is unimaginable today. and therefore requires staying up to date with innovation and a rock-solid investing process. Every evolution has winners, it has losers. Companies that try to bolt on AI into old workflows will probably struggle, just kind of like how Blockbuster failed to evolve. Many large institutions today are vulnerable. At Caruso Insights, this is why risk management is always first in our process, followed by a relentless drive to find and buy these transformative companies, such as Palantir and GE Vernova, which have really been key positions for us in 2024 and 2025. But valuations will swing wildly. Just as important as managing risk is managing excitement. The dot-com era, we'll see bubbles, companies will get ahead of their fundamentals, and while swings are a guarantee, but that volatility is what creates generational investment opportunity. The key is to understanding the patterns and having a structured process. As a veteran professional trader, a former market maker, I know that it takes more than just a good stock idea to succeed. It takes that structured process and having a good roadmap and a playbook for what to expect. So thank you for joining us for this video. If you found it valuable, please share, like, and subscribe for more grounded analysis on where technology and importantly markets are heading. You can also follow me on X at Caruso Insights and also on my website, carusoinsights.com. And the future isn't just arriving, it's building in layers. And if you know where to look, it's all starting to make sense. We'll see you soon with some more videos.